Hello, everyone. Welcome to Trading Tech Talk. My name is Daniel Sinnig, and I am the Technical Director of TradingIndicators.com. And I have to say, I am super excited to start off this brand new webinar series, which we will hold every Thursday at 6 p.m. Eastern to discuss what's new with trading indicators, to get to know you guys, our users, our clients. We're going to present to you tips and tricks, and of course, our unique take on the market. So Thursday Trading Tech Talk starting off today. So hopefully you all can see my screen. If you can, please write a yes or a 1 into the chat box. Okay. Perfect. This looks good. Great. Thank you so much for confirming. All right. So let's get started. Of course, as always, trading is risky. You must only risk what you're willing to potentially lose. And when it comes to hypothetical performance and backtest results, just keep in mind that this is not necessarily indicative of future performance. All right. So what do we have planned today in this brand new Tech Talk series? As I mentioned, this will happen every single week on Thursday at 6 p.m. And we've put this Tech Talk series together because of you guys, actually. We've received feedback from our users that they would like to know more about us. They would like to know more about our tools, how to really use them to trade with our tools and to improve your trading results. And guess what? We've listened to all your suggestions, and we have put together the Trading Tech Talk series. And every week, we will give you a variety of updates, what's going on. This will include market analysis and charting. Of course, you'll discover all kinds of indicators that we offer, but also indicators that we use. They're not necessarily our indicators, but we use them for our trading to improve our trading results. And these are complementary to the indicators that we create ourselves. I'm going to show you tips and tricks on how to use our indicators, how to use different platforms, how to find trades and trade signals efficiently, and so forth. So we have lots of these things planned. And of course, you will get the opportunity to get to know us as well. So we're going to talk a little bit about who we are, what's going on behind the scenes of tradingindicators.com, who is involved, what are our preferences, our hobbies. So you get a little bit of a feeling who is the team of tradingindicators.com. We're also going to give you every week updates of what is new on our site. So we're working all the time around the clock to improve our products, to add new products to our offering. And every week we will give you an update of what has been done and what you can expect in the weeks to come. And of course, the Trading Tech Talk is also an outlet for you to get feedback, to get your questions answered, and to provide feedback to us of what you perhaps would like to see added to our store or improved moving forward. And as mentioned, Thursdays every single week at 6 p.m. Eastern. All right. I'd like this session, and every session, in fact, to be as interactive as possible. So if you have questions, feel free to write them into the Q&A session. Our support staff will be, including me, monitoring the session, the Q&As, and we will answer them as we go through this talk and this webinar today. All right. So what do we have planned? Well, first of all, we're going to talk a little bit, just a bit, about who we are and who is behind Trading Indicators. So you get a feeling of who you're dealing with on our end. Then we're going to talk about you. So we want to find out, who are you? What kind of trader are you? Which platforms do you use? What features perhaps you would like to have added to our store, and so forth. And then we're going to cover some of our latest updates at tradingindicators.com. And then we're going to shift focus a little bit and talk about trend trading, and in particular about our 1, 2, 3 strike indicator and how this indicator can be used to identify trend trades. And then we're going to look at a lot of charts. Our head trader, Rainer, who I will introduce in just 1 second, has put together a system which he uses to stack the odds of trend trading in his favor. And you're going to see it's a very simple system which everyone can apply. Then we're going to look at questions that you perhaps have, and I'm going to give an outlook of what is coming up next. All right, so let's get started. Well, this is us. So as mentioned, my name is Daniel Sinek. I'm the guy on the left here, and I'm the technical strategist at tradingindicators.com. I love developing indicators and custom trading solutions. That's how I started off. I used to do it on demand when a client had an idea for an indicator. He was contacting me, and I would typically deliver the indicator in a couple of days to the client. And I've done this for many, many years. So I've really become an expert of developing indicators and trading tools for many different platforms. By training, I am a software engineer, in fact. So I did my bachelor, master's, and PhD in software engineering with the initial goal of becoming a professor at the university. So I was teaching software engineering classes, in fact, in 3 different languages. So as you perhaps can tell, I have a German accent, which is explained by the fact that I am indeed from Germany, born and raised, but came to Montreal, Canada, when I was around 21. So roughly 2 years ago. I'm kidding. Now, a while back, and it's I've stayed in Montreal ever since. And also, this call to this webinar is hosted out of our beautiful office in Montreal, in Canada. And I'm a soccer player, like every good German. I love playing soccer. I love to watch soccer. And even at my age now, I still play 3 times a week competitively soccer. All right, so this is me. Next in line, we have Rainer Michaelis. He's actually also German, coincidentally, but he's been living in the States at the East Coast, on the East Coast for many, many years. And he's our trading analyst. He's an engineer by training, and he has more than 20 years of trading experience and investing experience. And in fact, he will present to you today his very unique view on the market. It's a very simple method, but it's highly effective, as you get to hope for when you talk to a German guy. So it's very effective and efficient, the way he will identify high probability trades using our indicators, but also other indicators which will complement our tools. And guess what? He's also a musician. So he plays, I believe, classic music. He's been doing this for many years, and he's giving concerts in his neighborhood and in his area. All right, so this is Rainer. Then we also have Homa. You probably, if you've listened to my presentations earlier on, you probably have interacted with Homa already. So she is our design strategist, and I know Homa for more than 20 years. I met her, I think she was one of the very first persons I met when I came to Canada. We met at university. We did our master's and PhD together. We're working in the same lab, writing papers, doing research, studying together. And we've stayed in touch all these years. We've developed various projects together, not only in trading, but also in real estate. And at some point, we tried to import and export goods. So we tried lots of things. And it's been a great experience working with Homa over all these years. The trading indicators, Homa is our design expert. She is the mastermind about the beautiful visualizations that you may see with our indicators or our tools. She puts together, she's wearing the user's hat. Basically, she is your voice of the user. She understands the user and tries to tell us, the technical people, how to design our tools so they are as user-friendly as they possibly can be. And guess what? She's also into sports. She is a pedal boarder. All right, and finally, we have Nicola. So Nicola is our star fintech developer. And I say this because it's really true. He's behind many of the unique technical features that our indicators have. He's very creative. very resourceful, and he has a unique knack of putting unique features into our products, and he's very efficient doing this. If you have access to our beautiful strategy builder, for example, for Motive Wave, this is all Nicolas' work. I really pushed the boundaries of what is possible with Motive Wave, which is a trading platform, to create a very unique tool which did not exist for this platform before. Yeah, and he's an electronics lover. All right, so as you can see, we are a multidisciplinary team. So we have designers on board, we have, of course, traders, and we have software developers. And together, we're working for you to create innovative solutions here at tradingindicators.com. All right, so this is us. Now, you may ask, if you don't know what tradingindicators.com is, you may ask, oh, what is this? What is this? Well, it is actually a website, an online store indeed, which you can access when you go to tradingindicators.com. So let me quickly do this. So if you open up your browser and go to tradingindicators.com, our website will open up, and it is our storefront, which you'll see first. And one thing you will notice is that it's a bit messy, which is explained by the fact that we have added a lot of new features and indicators to our store recently. And the old design that we had previously is not holding up anymore. But the good news is we are currently actually designing a brand new homepage, which probably will be released in a couple of months. It's in the works, which will give you a much better experience using our site. So on our store, you can find trading tools, which will help you trade. You can find all kinds of indicators, and you can find our web dashboards. We offer our indicators for various platforms, including Trading View, MetaStock, Thinkorswim, NinjaTrader 7 and 8, Motive Wave, MetaTrader 4 and 5, TradeStation, and even Wealth Charts. So we're covering all the big players in the market, and our indicators are available for most of these platforms equally. All right, so this is our store. So if you do not know it, I invite you to check it out, as we have many innovative tools that will help you trading. And in fact, part of this webinar series is to make you familiar with what we offer, how our tools work, and how they can help you make better trading decisions. All right, so back to my slides. There we go. All right, so as mentioned, we do support multiple platforms, and here's a short summary of the platforms that we support. And recently, we have also added web-based dashboards to our repertoire, which allow you to access some of our indicators completely platform agnostic. So you don't have to install anything. All you need to do is to go to the URL, either on your phone, your iPad, or your computer, and you can see charting, scanners, and other tools that we have developed. All right, so that was a lot about us, but now it's time to talk about you, because we have designed this Trade Talk series, not for us, even though we do like talking and sharing, but it's primarily for you. So I want to know, who are you? Who's in the room right now? Yeah. For example, I'll be very interested in knowing what kind of trader are you? Traders are not the same, or not all traders are the same. In fact, traders are typically very different from one to another. Yeah, you might be just starting out trading, like our friend Chair here. Yeah, she just started out. She's a newbie trader. She doesn't have much experience trading yet, but she's interested and she wants to take control over her financial future. I think this is one of the goals that most of us have in mind when starting trading. Yeah, so Chair is just starting out. But on the other hand, we may have Matteo. Matteo is a professional trader. He's trading full-time, and he is interested in advanced tools to help him more or better trading decision, to fine-tune the trading approach that he's already using. Or perhaps there might be somebody in between, like Steffi. Steffi is what one may call an occasional trader. She has a full-time job and she trades after work, when she gets home. And for her, it's really important to make smart trading decisions fast and efficiently, because she doesn't have much time. She cannot spend the entire day checking out charts. So she really needs help finding trade ideas efficiently. Now, so as you can see, we have all these different trading personalities. But what I would like to know is what personality, Chair, the newbie, Matteo, the advanced trader, or Steffi, the occasional trader, which personality is you? Yeah, who would you identify yourself with? And for this, we have prepared a short poll. In fact, the first one is what kind of trader are you? So let me add this into your Zoom outlet. 1 second. All right. So you should all now see a little poll coming up. And please answer the question. Are you more Chair, who is our newbie trader? Are you more Matteo, who is our full-time professional trader? Or are you in the middle? Are you Steffi? So please answer, because this will help us fine-tune our approach, of course. Or you might be saying, oh, I'm neither of them, or I'm a combination of two of them. In this case, check the other checkbox and write into the chat window, what kind of trader are you? All right, let's have a look. Okay, wow, interesting. So we actually have a very interesting distribution. We, in fact, have 0 chairs. All right, so nobody's new, which is great. Okay. We have 46% Mateos, professional traders or traders who have a lot of experience already and who want to fine-tune their approach. And we also have 46% of Steffis, yeah, the occasional trader who trades after work, who doesn't do it full time. And then we have 2 other traders. So please, if you answered other, write into the chat window, what kind of trader are you? Or perhaps you're a combination of 2 different trading personalities. Great. Well, thank you so much. This is already very useful to know for us. All right. But I have one more poll for you, which is very quick. So let me pull this one up. And just quickly go back to the trading platforms. And I'm going to ask you, 1 second. Where did it go? Oh, and there we go. All right. So you should see another poll now. Which trading platform are you using? And here you have the choice to check multiple platforms. So perhaps you use multiple of them, please check all of them. Or as usual, if you don't use any of them, or if you use something completely different, check the other checkbox and write the trading platform into the chat. Oh, interesting. We have a very even distribution across the board, more or less. All right, so let's see. Our winner is, wow, indeed ModifWave. Wow, with 35% of users are using ModifWave. Oh, that's cool, interesting. I love ModifWave. This is one of the platforms I started out with initially. I programmed, my first programs and my first custom indicators were for ModifWave. That's great, so I love it. It's a great software. Let's see who's next. Then we have TradingView at 34%. Also not very surprising to me. TradingView is a web-based platform, which makes it very attractive to most users because you don't have to install anything. We do have then, wow, Thinkorswim, 28%. Interesting. Okay. Then next is TradeStation at 24%, Ninja at 17%, MT4, MT5 at 10%, Wolf Charts at 7%, and a couple of other platforms. And nobody voted for Metastock. Interesting. All right, that's good to know. Perfect. Good. Well, thank you so much for giving us this feedback and telling me a little bit about who you are as a trader and which platforms are you using. Thank you so much. All right, so moving on. So we did this. What's new? Okay, so what's new with us in this case? What's new at tradingindicators.com? And I'm going to use this the next couple of slides to tell you what we have added or improved in our offering in the last couple of weeks. All right, so let's start. we have released, and if you're a ModifWave users, you probably have seen the emails. We have released our first full release of the strategy builder for ModifWave. I can see a screenshot here. And what the strategy builder allows you to do is to click together your automated strategies for ModifWave without any programming skills, which is super awesome. So before this, what you need to do is to either program it yourself, but if you don't know how to program for ModifWave, this is already a roadblock. And the alternative would have been to reach out to people like me to have this custom programmed, which is tedious, which is costly. And there's a, it's a turnaround time. And if you want to try out multiple ideas, it might not be feasible. Now with the strategy builder for ModifWave, you can just realize your ideas on your own by simply clicking it together. And it's super easy, super fast. And typically it doesn't take more than 5 to 10 minutes to click together a strategy for ModifWave. All right, so this is out.
Daniel,
yes.
While you're on that, Harry has a question. He's using Strategy Builder version 1 on MotiveWave. He also has our Power Bundle. He's wondering how he can get new updates every time a new update is available.
Yeah, Harry, you should be automatically, if you have bought it, on our update list. And and when you're on that list, you will receive an email every time a new version is available. If you have not received any emails yet since you purchased, please email me or one of us at Trading Indicators what your current email address is, and we're going to check or make sure it's on the update list so that you will be notified when there's a new update available. And in fact, we are going to release a new version of the Strategy Builder, which has a couple of patches and fixes this weekend. It's going to be version 1.02. All right.
Daniel, when those updates come in, what is it, our email address that they come in from?
Yes.
Info at Trading Indicators or DS?
No, they typically come from Nicolas' email address because he's the mastermind behind the strategy builder. So probably from nj@tradingindicators.com.
Right. So just to let you know, if you're feeling like you're not getting our updates, check, make sure you add us to your contacts so they're not going in your spam.
Yes, exactly.
Yeah.
Okay, so that's out, the strategy builder for ModifWave. And then we've also improved, if you use TradingView and you have the Power Bundle, you probably have noticed, we improved the positioning of the statistics box for the Power Bundle indicators in TradingView. It used to be right at the end of price, which gets in your way when you want to do your analysis. And we at Trading Indicators, we're all about simplifying trading, making it clear. And with the new version of TradingView, also TradingView is constantly evolving and improving. It is now possible to put the text box with your efficiency ratings in one of the corners where they're not in the way of the price chart. And so this is available for 1 to 3 strike, divergence cloud, and volatility crusher for TradingView. Or if you have the Power Bundles, also available for these indicators as part of the Power Bundle. All right, so 2 updates.
I have a question while you're at it from Sam. It's about the volatility crusher. So he would like to know when we're going to have an opacity control function on Ninja for the volatility crusher.
I remember that email. I'm sorry it's taking us so long. We have so many things on our plate. It is in our production pipeline. So this opacity setting is not as easy to add as you may think. It's actually quite evolved, which has to do with how NinjaTrader handles these kind of graphics. So it's not a straightforward solution. It is in our production list, and I would imagine the next month at the latest you can have this feature will be available.
And a second question from him, he'd like to know if we can schedule a specific session on how to create an automated strategy using the wizard in Ninja.
Yeah, you're actually not the first one today asking this. Also, Fernando, I don't know if he's in the audience today, a good client of us for many, many years. I've talked to him many times. He also requested exactly the same thing. And I think this is really good feedback. So definitely. So this is what these trade tech talks are all about You ask what you'd like to see, and we can do it in this frame. So absolutely, we can put together a small session on this topic in the next weeks. Great. Alrighty. So, so this is what we've done in the last couple of weeks at tradingindicators.com. What's next? A couple of things, exciting things coming up. A big project is we want to have a new and improved website. This is a really big project because we have lots of things need to be taken into consideration. And of course, if you redesign your website, it should have a design which is sustainable, which is future-proof and so forth. So we're working hard on this. And you can probably expect in the next month or 2 months a brand new web presence for tradingindicators.com, which makes it much easier for you to find the tools you're interested in. We're also working on a brand new indicator. We're going to call it Trend Radar. If you have wealth charts, you've probably already seen it as part of your package, but we're going to create this indicator now also for other platforms in addition to wealth charts. We're also working on a new pro version of Gersh Trend, which is an indicator we have developed together with a German trader, another German guy, Martin Gersh. And it's a great indicator to predict market sentiment. And in the pro version, we are going to add trade signals to the indicator as well. We're working on the classic version of composite index divergence. The current version that we have for Motherwave and Ninja, it's based on our own interpretation of this indicator and how it should be. But we've received many requests that also the classic interpretation is wanted. So working on this as well. If you have MetaStock, according to the poll, nobody is using MetaStock so far, at least not of the people who are in this session today. We are working on an improved market commentary feature for MetaStock, which is very unique for this platform. In fact, for every trade signal that our indicators may generate in MetaStock, you will actually get a detailed description of why the signal was generated and what you should do next. When you should enter, where you should put your stops, your targets, and how you should handle the signal. So it's a super cool feature. And if you have MetaStock, I invite you to check it out in a couple of weeks once it's out. And last but not least, we're working on a pro version of the SP500 Crusher dashboard with all kinds of pro and advanced features. And guess what? We're also working on a live version with live data, all coming up in the next weeks to come. All right, good. So exciting times ahead of us. Now, let's take a step back. And again, let's talk about you guys again. Question: does your chart sometimes look like this? Yeah, it does look, I don't know, overwhelming to say the least. What we can see here, we can see 1 million indicators applied to a price chart. On the chart itself, sub-indicators, lots of different colors, lines, crossing. And I don't know, I can barely see the price bars behind all this, this craziness here. So it is a lot of noise. And trading is not about making noise, because noise will just distract you. And you get so much input that it will become almost impossible for you as a trader to make a clear decision. But as a trader, you must do a clear decision. You have to have a clear mind to make a good trade. So this is not a good approach, at least in my opinion, to approach the market. Trading should be simple. If it's like this, you run into the risk of what is sometimes referred to as analysis paralysis. The inability to make a clear decision. But traders need to make a clear, rational decision. You want to trade when the odds are stacked in your favor. It's about statistics. It's about having a good feeling, making a decision that you can understand later on as well. If you had all these indicators on top of each other, I doubted that you can make any clear decision, or more importantly, to make a decision which you actually can have a justification for, because it's just too much going on. But having a good justification in your head will allow you to not to panic when things go against you, or to make a clear decision to manage your trade afterwards. Because you always need to remember, what was the first rationale? Why did I get into this trade in the first place? But for this, you need to know what was my justification. So in a chart like this is hardly possible. All right, so we're going to help you with this today. So we want to eliminate all this noise. And Rainer, who hopefully is getting warmed up already behind the scenes, will explain to you how he approaches the market in a very systematic way without that noise. Yeah, with a clear chart and a clear mind. So, and we're going to focus today, because we have to pick a topic. We're going to focus today on trend trading. Yeah, it's a popular trading style. It's, I think, the most logical one for most traders, because the trend is your friend. And once you're in a trend, chances are that this trend will continue in the same direction. Yeah, at least the chances are bigger than a reversal at this point. And so let's quickly review. I won't spend much time because it's a bit theoretical. What is a trend? Yeah, so a trending market is defined as, well, price moving in one direction for a prolonged period of time. Yeah, and typically in such a trending market, price action can be confined by ranges, which is sloping. Yeah, so here you can see a nicely upsloping range, bound at the upper side and a lower side. And within that range, price action tends to bounce back and forth, bouncing off resistance to the upside or of support to the downside. Yeah, but within these bounces, price typically will make higher lows and higher highs. Yeah, this is when a trend is clearly established. Yeah, you're making higher lows, even though there's retracements, but the lows will be higher than the previous lows and so forth. Yeah, so this is a typical trend trade. And there's various ways of trading the trending market, and Rainer will explain this to you in just 1 second. And in fact, you will be using our 1, 2, 3 strike indicator, which is our trend indicator for identifying potential entries for trend trading. And 1, 2, 3 strike has been designed to issue signals, to generate signals when a trend has been clearly established. And we do this, or the indicator does this, by looking at 3 dimensions. Directionality, so price needs to move in one direction for some time. We want to see an increase of volume, which typically is an indication that, after a retracement, trend will continue in the direction of the trend. And volatility, yeah, we want to have some decisive action into the direction of the trend. And if all 3 things come together, an entry signal is generated. And in fact, our indicator not only generates entry signals, but also tells you when to get out of the trade. We have exit signals built in as well. We use visualizations such as the bar coloring to tell you what is the current trend. The indicator is designed to work on all time frames, intraday, daily time frames, even weekly and monthly. It works on all chart types, OHLC charts, tick charts, volume charts, all kinds of charts. And it works for all asset classes, regardless of what you trade. Even if it's FX or cryptos or stocks, it will work. And of course, what we've built into our indicator, one of our unique features, is the real-time statistics box, which is an indication to you how well the indicator or the signals of the indicator are working for a given chart. Yeah, this is very important feedback to you, because sometimes the indicator may not work as expected. And in that case, you may not want to use those signals or don't rely on them completely. Typically, there was no way of really knowing, except for using your intuition, how the signals have been working out historically. But now with our real-time statistics, you can actually see, you have hard evidence, empirical evidence, how well the statistics or the signals have been working out historically speaking. All right, a couple of quick things about our indicator. You can see it here applied to the chart. Now, this is how it looks like. And the first thing that you can see is that we have, 1 second. Oh, there we go. Long and short entry signals. And in 1, 2, 3 strike, these signals are either green arrows or red arrows. Green arrows for long entries and red arrows, or not arrows, these arrows for short entries. We also have, exit signals. These are these smaller white arrows in the opposite direction of the initial entry arrow. So you can see here. The number of exits that are generated for an entry is configurable in the indicator. And we call this the partial exits, because all these arrows here are partial profit booking suggestions, yeah, or sometimes at least take something out of the position to minimize your risk should price go against you. Yeah? In this case, you may not be in profit, but at least you minimize your risk as price action is further unfolding. And we have these for long entries, the exits, and also for short entries. Bar coloring is used to show trend direction. Yeah, it's very simple. Greenish bars indicate an uptrend, and reddish bars indicate a downtrend. All right. The indicator will work on all time frames, symbols, and chart types. Yeah, in this case, we've applied it to the 1 minute chart of the S&P E-mini futures. We could have applied it as well to the daily chart, or perhaps to a stock chart or a tick chart. It will work equally well. And last but not least, actually the most exciting part of it, I believe, in my opinion at least, are the performance statistics. You can see them here in the upper left corner. And these statistics will tell you how well the signals, historically speaking, have been working out. And basically what you can see here is that 67% of the long signals have been winners in our look back period. In this case, the look back period was from April 16th, 2022. But this is a 1 minute chart, so we don't look back too long because the market for these lower time frames changes a lot, and looking back much further than this will not get you better insights. Yeah, and for the short efficiency, we can see that 64% of the short signals have been winners on this chart and time frame. And of course, if you change the parameters of the indicator, or if you change time frame or the symbol, these statistics will update accordingly. And for you as a trader, this is a very important tool to see which trend direction is working better. Perhaps sometimes you have a big bias between long efficiency and short efficiency, basically telling you that long signals are working better than short ones. And for you as a trader, you will then make the decision, well, perhaps I only want to trade according to the long signals and ignore the short ones. It's all about stacking the odds in your favor. Okay, so so far the theory, and what you've seen here, the statistics, is what we also call sometimes our IET technology. IET stands for Intelligent Efficiency Technology. I'm not sure anymore. Yeah, Intelligent Efficiency Technology, IET. And these are the statistics. Basically, they will tell you how efficient have been the signals, historically speaking. And for you as a trader, you can use these statistics to find the optimal parameters of your indicator. As you play around with the parameters, these statistics will update in real time. So it will allow you to find the parameter settings which would give you the best results, historically speaking. You can see if there's a long or short bias in the market, allowing you to focus only perhaps on long signals or only on short signals. And sometimes they will prevent you from trading when the odds are not in your favor, when market conditions are not good for trading. They will keep you out of the market. As I always say, sometimes staying out of the market is just as important as staying in the market. Oh, sorry, as getting into the market, because then you don't lose money at least. You're staying out of it. Okay, great. Enough theory from my side, at least. Now it's time to look at some charts, live charts indeed. Rainer, are you there?
Yes, I am.
Hi.
Hi.
Great. And sorry if I took a bit longer at this introduction. I do tend to talk a lot sometimes, especially when I get carried away. But now it's time for me to be quiet. I'll be looking at the chat windows now, and if you have questions in the Q&A, I will be answering them. And Rainer, I will allow you now to share your screen, and please take it away.
Yeah, I mean, you just could go on, and I have an easy afternoon, right? Okay, there's, can you see everybody on my screen? Can you see it?
I can see it, yes.
All right, perfect. I hope the other ones can see it too. I don't know, but let us know if you can see it.
Yeah, it's all good, Rainer.
Oh, okay, perfect. Yeah, as just 2 remarks. I think I was wrong when it came to the trader. About the question, what kind of trader you are, I was wrong because I didn't expect that high amount of full-time traders. That's amazing. Wow, that's really, never thought that would be over 40%. But I was right on the platform. So that was something where I'm at least was right. So you saw that beautiful chart that Daniel was showing. And the fun thing is when people have this on 2-3 screens, and each screen even populated even more with different things and more things stacked and more things stacked and some really strange things. And believe me, I did it too. It's not that I'm here saying this is weird. No, I did that too. That people tend to use a lot of these indicators that tell them the same thing. And they think because they're telling the same thing, it must be very good because now they all say you should go in. And eventually they're pretty much the same, similar indicators doing similar things, but it really doesn't help you to become more effective or more exact and better in your entries, or it probably is the opposite. It's a lot of professional traders that I'm in contact with. They look at a chart like you see right now, and they have very, very, very few indicators to really tell them what's going on, because otherwise they don't see it. So what I would try to do here is, how do we stack the odds in our favor? This is, I think, one of the most crucial thing, because never blame the indicator that you screw up a trade. It's not the indicator. The indicator cannot do it. The indicator has a snapshot of the moment in time. And if the time changes, the indicator says, too bad, now I changed my mind. Now it's different. So don't blame the indicator. It's you that has to look at those things. If you cross a traffic light, and it says green, you just walk, right? You don't look. Well, that goes good, but if you live in New York City, I bet you that's not going to be good enough, because the odds are that there's some idiot coming around the corner hitting you. So you have to look. And the same thing with an indicator. The indicator just gives you a trigger, and you have to make sure that you have stacked all the odds in your favor. And there's different ways to do it. Look at a chart like that. And I want to give you a few things. And for the people that are advanced traders, I'm sorry that you perhaps see something that you know already. But we can do other sessions where we can go way more into the lower time frames and go way more in depth of the day trading things. This one is really right now geared towards the swing trader, the Steffies that say, swing trading is probably the most profitable for most people, because these are actually, I think, the easiest trades. If you don't want to just put something in for 20 years and wait, the swing trading is probably the way you should go. So what you see here is the Dow Jones Industrial Average. And of course, you can go there and say, you know what, no problem. I see very clearly here, we have absolutely an uptrend here. And we have, we have probably a consolidation phase here. We have that here, we can do this, and you can do this for each chart, and that's really a lot of work. So you might not even say that's good enough. So what I always recommend is do something that helps you to understand where are we in the market. And there's no need to go to tons of CNBC, to all these kind of reports. No, if you are a swing trader, whatever, there's very simple ways to do this. You can, I can show various things that you could use. Right now, I want to show you something that I think is very effective, and I have a couple of things on here. You see just the plain chart, and I'm going to add a few things that are very simple. What I'm going to add is a SMA 10. That's the simple moving average. You see that one here. I'm going to add an MACD, very simple 879. And if you have questions about that one, send us in the chat. We can definitely have somewhere aboard where we can put these things so you can see it. And the Stochastics works pretty much on any platform, because you're not bound to any kind of specific indicators here. And what you can do is look at this thing and you immediately can find out where are we here. You see On other platforms, you can turn on a trigger that it shows you a nice error when you have a 0 crossing here, or if price crosses above the SMA 10. With TradingView, I can't do it. With TOS, it works beautiful, and you get nice green arrows and red arrows. And you can probably take something like, I would say, take a vertical line, put it in here, and see where it crosses. We had a cross here, we have a cross here, so we probably in an uptrend. And if we don't have several downtrends, like we have it here, for example, here we cross and close below it, and we also go below this one here, it probably stops. And then we have a longer stretch again up. So it's quite a simple way. And the beauty of the thing is you can do this pretty much with any chart and figure out, oh, we're still in a beautiful uptrend. Look at this Apple starting in July. Look at this, May 1st, 19. We are officially in an uptrend with Apple, which means if I know that I'm in an uptrend, I should be careful to play shorts because these are definitely counter trend. Is that wrong? No, it's not wrong, but it's counter trend. You should know a counter trend is very, very much more difficult to handle than a regular long trend. We have great tools to do this. We talk about this later on, but here, if you want to do something like the 1, 2, 3 strikes, and you can say here, beautiful done, I'm here in a nice uptrend, then it's probably better you go with something long and don't look at the other things, okay? I think that's not very difficult to understand. It doesn't take long. If you have your list of your favorite assets, do this, put them in here, click through, figure out where are we currently in this area here from November 1st till August 1st. Ooh, you are in a really difficult phase. It doesn't say that you can't make money here, but it is not easy because you're in a consolidation phase. Perhaps it's better to choose something that's easier to trade. And because we always try to stack things in our favor is, why not using something that's easier to trade? So let me show you something else, because I don't need all these nice things right now. Let me show you something else how you can do this. Let me remove this. When you have a chart like that, and I take that all off so you don't even see it, I think it's very simple. Go for the daily. This is very good because the swing trade, it's just beautiful to do this. Get as much as you can on the screen. And what you see here is what they call pivots. Pivot high and pivot low, which means these are these things here, these are pivots, right? So you see we have a high, a low, a lower high, a lower low, and so on. That tells you easily also something about trend. But what you can do with these pivots a lot easier is also, why don't you connect them and pull a little bit like these zones? And when you do this with these zones, there's a great thing that you can do later on, because once you connect them, you're going to find out that you have zones. Very simple. You don't need a PhD for that. You just need somewhere, just common sense. And
so are you saying right now all my years at university were for nothing?
Look,
okay.
Look, I would never say that. You know this, right? And listen, I did artificial intelligence at the university, and that was weird at that time in the 80s. So
just kidding.
no, it's fine. But look at these things here. So why are they good? These are what we call the support and resistance zones. And these zones are very, very, very important, because once you know those zones, and by the way, I can go to a smaller time frame and you will see, if I scroll in here, that they're beautiful. They're just very, very, very correct. You see hits here until it breaks through. Perhaps I went a little bit too close. Let me go on an hour. That's easier. Now I'm a smaller time frame. See how beautiful they work, right? Great. So what you do with these resistance zones is really understanding where does the stock has a problem to go through, and where does the stock really finds a bottom to do, you know, a new swing, a new starting a new run. And if we know, for example, that Berkshire Hathaway is in an uptrend, then if we now apply, for example, the 1, 2, 3 strikes, we can easily find out which strikes to use and which not. There are certain things we just wouldn't use. And please, there's nothing wrong. You know, I do them this way, and tomorrow I'm doing a little bit different. It's zones. It's never a specific point, whatever. These are zones, and the market doesn't care if it's like a little bit more or less. It's a zone that is a resistant or a support zone. So that's why I like to use these rectangles and not lines, because the lines is always like, oh my God, it didn't hit the line. Oh, it crossed the line, stuff like that. No, take the zone. It's a lot easier. And now you can see very, very easily, for example, take that beautiful signal here. You see the next resistance, there is nothing really on top of it. So this is easy to take. Would I take the red one here? No way, probably not, because I know that there is a support zone. So I would not take it. This one I definitely would take. And if we talk about later on where we put stop losses and stuff like that, I probably would have stayed in, even though there is a new signal coming. I probably would not be out. I would still be in here at that point. I probably would take a partial, but the rest would still be in. So here you can really figure out when not to take and when to take trades. And let me take one that's easier to read. Let's take an Apple, for example. A lot of
just
people
a quick remark, Rainer.
Yeah.
For you guys, so this is 1, 2, 3 strike on TradingView. See, the visualization is a bit different to what you've seen on my slides. Just because TradingView has different symbols available for this. And in this case, a green cross is a long entry and the red cross is a short entry. So once the indicator is enabled, you will see that.
See, it really goes easy to do, and you don't have to be too, make sure that you do it on a higher time frame, because otherwise it's too difficult to do. So now let's apply the indicator. So see, so what is the distance here? 128 to 138. Well, I had the 138 here. So if I go in here, I should be aware that this one could be a bounce, so that I would either be careful putting a tight stop loss once it bounces, so I don't lose all my gains, and be aware that this could just get me out of the trade very fast. It goes through and it's beautiful. I would just stay in here, not going out, because I would definitely wait, because once it breaks the high, there's no reason why it shouldn't run. So I would definitely stay in here and see how beautiful it does it. And because we know this one, I definitely would know the latest to get out is really here on the support zone. But you can really go and filter out trades. And I haven't even done any adjustment to the 1 to 3 strike. This is the standard that it comes with. So you see here we have 86 and 56. Probably could tweak that to make this a lot more better. But this way, it's a lot easier for you guys to really understand where should we not and where should we go. And beautiful, this one here, just above the support or now resistance support zone. Beautiful, go in here. There's nothing in your way, all empty. You can just let it run. Go in there and probably would keep it up to here, no problem. So that is a very simple way. And we can do this with others, like take the Amazon, same thing here. Sometimes I like to take everything off, so I have the naked chart. The naked chart makes it really the easiest way, because then you see right away the pivots. Look at the pivots here. Aren't they beautiful? Oof. Here, the high. And like I said, there's nothing you can do right or wrong. Just put them in there. And if they're not perfectly, doesn't matter. It really doesn't matter, because they're zones. The market is random. The market doesn't care. So, and then when you put on the indicator, I'm sometimes doing it sloppy. This one is a nice one here. This is a real nice one, because we are at a zone, and if we know our rules to enter, we get a signal. So normally what we do is we wait for the next candle, and when it breaks the low, we get in. So we miss all that part here that really cost us money. We go in, but we would take probably the resistance zone as our exit point. Well, perhaps not a lot of people because Amazon is very expensive, but at least you have a very clear part where you say, am I willing to take this risk for going in here, or waiting till it breaks the low of here, and then risking to let it go up to the resistance zone and then let it run down? That gives you a clear view, because whenever you do a trade, you should have several things in your mind. First of all, what is the trend doing? How am I compared to the trend? What is my risk potential reward compared to the risk I'm taking in this trade? And once you have those things clear, you should also have clear ideas about exit. Just 1, 2, 3 strikes gives you great exit ideas, but sometimes this one, for example, perfectly timed, right there at the support zone, and that's good. Get out with at least partial and book some profit, because you don't know if it's going to bounce up and go up again. But you can leave a runner in here and set it so that you don't ever let a trade go bad. That you don't get into any kind of problems here, and then see if it goes on and look at these, just nice. But the point I tried to do really is, if you look at these things, let's look at some Tesla. People like to trade Tesla, so they just love to trade Tesla, and it is great. So very simple. Oh boy, I'm really sloppy, but there's another one.
So Rainer, while
Yeah.
you're drawing this, if I may summarize your approach, what you're teaching is that take all the indicators off the chart, draw the support and resistance zones where the pivot points are.
Yeah.
Then apply 1, 2, 3 strike to the chart.
Yeah.
Do not take long trades if the resistance zone if price is below a resistance zone and it's nearby, and do not take short trades if price is above the support zone and it's nearby the support zone, if there's no room. I think this is what it boils down to.
Yeah, I mean, there's two things. Never say never, right? There's plenty of situations where you perhaps do it. All it does is probabilities, and the point is very simple. And we can do this if people are interested, we can go way more in depth and say, okay, let's apply a few more indicators to understand like a VWAP or like an ATR or something like that, where we can understand what is the potential run of a stock and what is the potential reward. This is really basic here for people that are very simple swing traders. And of course, the indicators are just triggers to help you, but it is not a rule. Never do this, never do that, whatever. It is definitely keeping you out of trouble. But there is the biggest thing is really, if you do something like that, you can avoid getting in trouble, and you can avoid getting caught on the wrong side, and that is very, very costly often. So if you have enough information about, I know J&J is in an uptrend, and J&J currently is consolidating but still in an uptrend, and I say, well, let me take a long. I just got to be aware that I might bounce here, so I should be careful with my stop loss. I should not let it just run or not look at it for days. I just need to have an eye on it in order to see if it doesn't do what I expect it to do, or if it bounces, I'll take it off. This is what I'm trying to do, and this is very important, that people learn a little bit more how to read the charts, and rather than getting cluttered with all these with these indicators, finding a few indicators that they'll learn to read, and then learn to understand how the chart, how this stock works with the with the resistance and the support. I have actually the stocks you see here is a part from my favorite stock lists. And what I don't do is, for example, just randomly go through the market. I try to really have a nice basket from stocks from different areas, and then also looking at them in order to get a little bit feeling for the stock, so that when you see this, you understand a little bit how the stock behaves, because they do behave, and it's always a repeating game. And there's a very nice video for the bundle, the 360, about how the market continuously revolves in trending, consolidation, and in these different stages. And that is very important to start understanding the market without making it like a overwhelming science, because a lot of people just do not have the time to do this. But if you understand basic, simple things, you can even read from that chart when it would be good to get in and not to get in. And you would probably say, you know what, this trade, I'm not going to take that, because this is way too close from to the support zone that's here. Look at this. The support zone actually goes all the way here. So I'm not going to take this. And if we add a few other indicators, it would probably also see that momentum is not in my favor to do this, right? And if we do the proper adjustment, I think I had an adjustment for J&J. It was actually popping up here right in the beginning when it had a turnaround to give me a nice run. So you can see, fine, perfect. I go up here, I know it can turn around or come back, and let's see if it breaks through. And if it breaks through, it's free to run. There might be news.
Rainer, a couple of things maybe I can interject here as well. So what's really cool about TradingView is then you don't have to redraw these lines or these zones every time you open it up. TradingView actually remembers it, which is super cool.
Yeah, I just killed them all. So
next time you open up the symbol, you will see the exact lines.
They're still all there.
Exactly. So this means to you as a trader is that you do this homework, which I would call it. Once you do the analysis, you figure out what is the situation right now. And what I would also suggest then, based on your support and resistance zones, you can actually classify your stocks into where are we with respect to those zones. So if you're above the zone, there's lots of space, for example, to resistance, you can classify that stock as a potential long entry stock.
Absolutely.
Into your watch list. And
absolutely.
And the same way for short stocks. And what's also really nice of TradingView is it makes it very easy to configure your 1 to 3 strike indicator properly. And this is where the statistics come in. Rainer, perhaps can you open up the statistics?
Is this open? I can go through the settings, and we can work a little bit on those things. Yeah, definitely.
So in TradingView, what you can do is and please look at the efficiency statistics on the right. Now, if you're on the settings, okay, and you just change, let's say, the fast MA period to 8, look how statistics will update in real time on the right. You see it updating, which makes it super easy for you to find good settings, because you don't have to click OK at the bottom first, then go back. It does it automatically as soon as you change the parameter. And this is super convenient. If you use Motivwave or NinjaTrader, you will have a similar feature for your platform, which makes it very fast for the user to find the optimal settings for an indicator, for 1 to 3 strike for a given chart.
Yeah, and there's one thing that you should definitely look at. You can play around with those things. There's some very, very simple rules. Keep the fast smaller than the slow, and otherwise you can work with the volatility period, the volume period, see what you like best. Some people try to push it to 100%. Don't do that. It probably gives you other drawbacks. Let me show you one thing you should definitely look at. let's take just one entry here. I zoom in because I want to show you something. So what you should look for when you have here, you have the signal. The signal prints once the candle is done. That means the signal comes once this candle is done. So you should look and say, okay, fine. The candle is done. Where should my entry be? Should I just go in next day, like immediately? I personally wouldn't do this. I personally would not do this, because that is something where you know, you want to have what we call the confirmation. If you're in a strong trend, well, you should probably not even enter in a trend on a red candle. But what I do personally is I draw myself a line here and I say, if it goes above this candle, I get in. That would be here, okay? So, and where's my stop loss? There's two things, depends on the stock. Normally, I say from the candle, the previous candle low. Well, that could be here, or you could say the last pivot low. So depending on the stock, on the time frame I'm trading, and on the volatility of the stock, I would probably say, okay, what is my potential gain? If I say, well, there is not really any kind of anywhere a resistance that could just that I see right now when I'm here, I don't know this kind of resistance here. So I say, so there is not really anything that can stop it. So it can go at least whatever ATR you average to a range, what you think could be. So you could say, well, let me go to the last pivot high or the support zone. So you would say, okay, I will honor the, you know, let's move that here to the pivot. I will honor this one here as my stop loss zone. And in some cases, people say, well, you know, I take the previous candle low, or if it's that close, I take the previous of that one low as my stop loss, so that I have a decent kind of risk to reward, which is very important. That is one thing to do it. And you should really look at your adjustments from the 1, 2, 3 strike, that you don't have these kind of, oh, I have 100% run, but let's say that it shows an entry here and you have all this drawdown. That kills you, that kills you. You're not going to stand it through. That would make no sense. So you would have to, you know, you don't need 100%. I found stocks with like a 65, perfect, with very little drawdown and no big stop loss. That is very important that you look at these things, the stop loss to the potential risk reward that you can get.
Yeah, and right now on that topic, and for everyone out there, so our efficiency statistics, they are not, you know, how much money you would make, historically speaking. They're just ratios of winning signals versus losing signals. They do not take into account how big my winner was or how small my losers were or vice versa. And you cannot necessarily conclude how much gain I would have gotten, because this of course depends how big my winners are versus the size of my losers, right? But this is not taken into account. So don't get fooled. Don't get fooled by that.
See here, for example, you can say, oh, perfect. I have a beautiful, look at this. It goes up to here. Yeah, but you have to suffer these that is a lot in Tesla, a lot of money. You know, you're talking about you're going $70 down. And that is something where you need to adjust it. And what I also would recommend, what you should do is, when you adjust these parameters, I would not go crazy and would do like crazy adjustments for every single stock. I would take groups, take the tech stocks, or take any kind of families or sectors, and then find a setting that works for those, and don't change them for a couple of months, because otherwise you don't get a feeling for the stock and how this thing works. Because if you change them continuously, those signals always are very different. Find something that has very little drawdown, that gives you entry signals that are not costing you a lot of risk, compared to the reward, and use them. And there's no need, if you are in a good run, to get out, because once you know where your zones are in a stock, where your possible resistance are, that signal is perfectly for an entry. And these are just suggestions. There's no need to say, oh, it says I have to go out if I'm in the middle of a run. No, do a trailing stop or do anything that keeps you in there, but just don't say, oh, the system tells me to, and now I have to do it, you know?
Yeah, Rainer, I think we need to move on because it's getting a little late and we want to honor our 1 hour time slot, which we already exceeded.
Well, you talked so long. It was you. It was not me.
But maybe just to summarize what Rainer has been showing you, I think what the essence of his message is that 1 to 3 strikes, just like any indicator, it's a suggestion to you. It's like a traffic light that it is now okay to cross the street, but you should still double check that it's safe. And the same applies to trading. You get an entry signal, but you should definitely still keep your eyes open. What is the context of that signal? Am I near a resistance zone if it's a long trade? Am I near a support zone if it's a short trade? And if it's too near, perhaps you do not want to follow it blindly. I think this is the essence.
Yeah.
All right. I will take over the screen again.
We have a few questions, Daniel, that we should get to, or did you want to wait for the Q&A? Is that next?
Well, the Q&A anyways, but let me share my screen and we're going to get to those questions in just a second. All right, perfect. Okay, so Q&A. Great timing. So Homa, what are the questions, please?
So some of them are statements, but I thought, excuse me, they would be interesting to call out. So Kwame is saying, so what you're saying basically is understand the market structure before trading. Is that what we're saying?
I couldn't have said it better myself. Yes. But Kwame, what's important is that don't kill yourself understanding the market structure. You know what Rainer did when he just drew these support and resistance zones? He just connected the pivots, the swing points. That's all he did. This is something super fast. You do not need a PhD or in market analysis for this. Everybody can do it. So a simple understanding of what the market does in terms of these zones is sufficient in most cases.
And it's probably the best because the people are trying to make things way too complicated.
Yeah. Okay. Are there more questions, Homa?
So Tony, again, it's a statement. So he's saying that he never thought of it this way, that using multiple indicators all giving you the same signal doesn't mean they are calculating differently. Although I do believe that there is a different calculation. So I wanted you to clear that up, Daniel, if possible.
Yeah, exactly. But you know what indicators do, and this holds true for every technical analysis indicator. They are based on 5 different things. They are based on the open price, high price, low price, and the closing price and volume. So 5 different factors, which are the input, the primary input for all these indicators. And there's only so much you can get out of it. You can apply all kinds of math to it, but there are limits. So just stacking on your indicators, which are all based on historical price and volume action, will not add much more information if you keep stacking it on. So I believe that there's a sweet spot. And I also believe that the sweet spot is probably at the lower end of the amount of indicators that you need to use.
Michael's statement is that it's usually best to enter setups and triggers when above the 20 SMA.
I totally agree.
If it's a long trade.
If it's a long trade, I totally agree. Michael is probably not a newbie. There's definitely things like that that help you to be on the right side, be it the 50, be it the 20. Depends on the time frame, but yes, definitely.
And he also added that always being concerned about curve fitting to one scenario.
Correct. That's why I would not go crazy about trying to adjust it for each single stock, the 1, 2, 3 strike. I would actually try to find a setting for a time frame. Something we're currently discussing, that that you have something in the indicator so that when you switch a time frame, you have your preset setting and then you use that one. Curve fitting is the worst you can do. That's definitely a disaster. And that's not what we absolutely not want to do. Absolutely not.
And just to add on to this, so I started off writing automated strategies, and back testing and optimization of the parameters was always been part of the game, and curve fitting has been my enemy for all these years across the board. But luckily, and I think we can tackle this in the next session, there are ways where you can avoid curve fitting. And all this takes something that's just a common sense. Look at the signals that you filtered out. And one thing that I always, we can tackle this next week, I always look out for, where did my winning trades come from? Are they from a very extraordinary market circumstance, which you just added into your, by adjusting the parameter? If that's the case, then this might be a sign for curve fitting. But if my winning signals, they have been frequent across the board in different scenarios, if this is in different aspects of price action, this is a sign that curve fitting did not take place, and this is an insurance to you. And what these warning signs are, or the affirmation signs are, we can discuss perhaps next week. But yeah,
I would say just a short thing. If you have something adjusted to either 100% or too small, then you definitely do curve fitting.
And one last comment, this is probably more geared towards Nicola. Marcelo said that it would be great if we can use the support and resistance drawing tool in the strategy builder for Motive Wave.
Yes,
Yeah,
that's a good idea. And we are going to revisit all these topics for the support and resistance indicator Motive Wave. Of course, it needs to be available for the strategy builder, meaning that the values need to be exported in that sense. If that's the case, then yes, you probably can already right now use these values to create your own strategies.
Okay, I think we're good with the Q&A, Daniel. We should wrap it up. Yeah, thanks,
Alrighty.
everyone.
Okay, so yeah, so this brings us to the end. I hope you enjoyed this very first Trading Tech Talk. I definitely did. And we're going to keep this going every week from now on. The next one is planned for next Thursday, which is April 28th, again at 6 p.m. Eastern. And tentatively, the topic that we've picked is going to be reversal trades. And we're going to do a lot of market analysis and charting again. And we're going to look at some of the indicators, including divergence cloud, which will help you to spot trend reversals.
Also, if people could send in emails what they would like to talk about in these tech talks, then you could really focus a little bit more and be more specific in some areas. That would probably help them.
Absolutely. So now I forgot to, sorry, I forgot to mention, this Trading Tech Talk is really for you guys, for our listeners, our users, our clients, to make us cover topics that you are interested in. But of course, we need to know first what these topics are.
And if you can go to the next slide. Yeah, I was actually going to say, Tim, and there's a few other people that want to know how they can reach us. Like Daniel and Rainer said, these tech talks are really for you, our audience. So please email me at hj@tradingindicators.com if you have any feedback. And this was our first one. So thanks for being patient with us. We're kind of just getting going on this and trying to figure out, how, what kind of material and what kind of topics would be of interest to our users. So email me with any feedback on today, but also if there's a topic that you'd like us to talk about, and we'll make sure that we'll add it in and we'll address all your issues. And also come with your questions. And if there's specific charts that you'd like to see or specific symbols, when Rainer and Daniel are going through the charts, you can let us know and we can go through those as well.
Yeah, and just one last thing, don't be surprised if you receive a survey right after this session. We have set it up this way. I was hoping we could do it during the session, but apparently the surveys are always post-session and we couldn't take it out anymore. It's going to be what features or new products would you like to see added into our store. So don't be surprised if this comes to you.
Daniel, could we post it now? Because we still do have people.
We cannot. I need to stop the record.
Okay.
The session. Unfortunately, this is a Zoom limitation, or perhaps by design. So only polls can be in session. Surveys are post session. Anyways, it doesn't matter. I hope you all had fun, and I'm excited already for next week.
Thank
So,
you very much.
good night, everyone. Bye-bye.
Thanks, everyone.
Bye.